Kevin, no name, Charles, Dicky Doza. Cool. All right. What do we have here? What we have here? Libel. Sweetness. Cool bean. JG, what's going on? Mustachio Papa. Jason, what's going on? Pierre. Hey, Doc's in the house. Doc has been around for a while. Chano, what's going on? Pierre. Penizzle. Guri. Choi. Ali. Kevin. Raphael. Kevin, what's going on? Doc, what's going on? Jason. Francesca. Kevin. Tucker. Gadu. Ali. Hello. Big Scott Hacker. Danielle. Good evening. Scott Hack, evening. Crypto, what's happening? Sue Fice. Okay. Gen Xer 99. Gotta love it. All right, Kate, good evening. Carolina, good evening. Francesca, good evening. Kate, good evening. And how are you today? Well, good everyone. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a simple, safe, predictable, consistent 1% per week. Let's get the ball rolling. Here we go. You can tell them about a daily mission. Yes, I can. Evening all. D King, what's going on? 910. Roger, Sean, Steve, much love. Socrates, good evening, sir. The Dudes abides. Daniel, good evening. Kevin, you like hymns. Well, let's check it out. HIMS. Sarah Scott, how you doing? I'm doing wonderful, thank you. Alpha, Miguel, Gabriel, good evening. All right, so let's get out of this. We don't need that. That being said, let's do it right here. First on the list of things to do today, before we even get started, like I said, my name is James. Hold 1 second. It is precisely 8:57 p.m. on October 28th, 2025. So if you're new here, the screen behind me, okay, the screen right here behind me, is live and being recorded on YouTube. So if you have the desire to see all this stuff quick and easy and close up, your best bet is go to the other room, pull on the big screen TV, pull it up on YouTube. You can see the screen a lot easier on YouTube than you can here. Now, you're not going to see these little tiny numbers. So best bet, there you go. Odin, how you doing? D King, what's going on? Francesca, thank you. All right, so Kevin, do you think SPY will hit 700 or 670 first? Well, see, the funny thing, you got to hit 670 before you can hit 700. And I really don't do that one anyway, so I really don't follow it, so I couldn't help you out with that one. Joseph, 67. All right. Bright Brown Girl, good evening. Just Avery, how are you? Lucidity Grooves, good evening. Ty Grimsley. Jubug. Bit Bro, what's good? All right. Good evening. All right. So October. Life of Colton Ray. Oh, the life of Colton Ray. Good beans. Doc, crypto, whatever. Lizzie. Good evening, Miss Lizzie. All right. DJ. Good evening, DJ. All right. Has HIMS been around paying dividends for 20 years? Kevin, absolutely not. But Kevin, you got to remember, anytime somebody puts up a stock, I'll take a look at it. It's a common courtesy. That's about it. I was a little late yesterday, hoping you had a good time. Absolutely. Thank you for that. What's your opinion on politics? Don't even get me started. ACN. We got 3 to look at first thing this evening. So, California also went on lockdown again. Don't start. Oh, what's that in the back? Sarah Scott, we're actually teaching dividend stock talk, dividend investing for weekly cash flow. Okay, you're new here, so just say hi, see what's going on. Hey, take it out. Snake Khan, what's up, fake economist? Okay. Bro, eye is going the other way. Yeah, I got stuck with a nail, brother. See what happens when you get stuck with a nail in your eye. All right, dealer put in on black. All right, whatever. All right, that being said, first one we're going to look at today is hymns. And no, I did not suggest hymns. Someone else suggested it for me. So if you have a stock you want me to take a look at, not a problem. I'll poke it in and we'll take a look at it and see if it fits what it is we're looking for. What's your opinion on reading about grid? Do you like it, yes or no? I have no idea what you're talking about, grid. No idea whatsoever. Razan, tell me gold bottom. Yeah, gold. What I remember gold at $250 an ounce. So you really don't want my opinion on that. Do you respect Mo? Now I have no idea who Mo is. Okay. How is AMD stock coming along? Okay, we'll take a look at that one in a little bit. Also, first on the list, let's just jump right on in. HIMS. HIMS. Here we go. And first thing I always want to do anytime I look at a chart of 5 very simple things. Where's the high? Where's the low? Where was it a year ago? Where is it now? And what is the actual motion? See, up, down, up, down. It's coming down at the moment right now. Not the greatest place in the world to jump in. If you're liking it, look at the last 30 days. Last 30 days always gives me a good idea of where do I think it's going next. Well, 30 days ago, we're at 60 bucks. We drop down to 52, shoot up to 65, drop down again, back up, back down. So it's in a downward trend at this moment in time. Not the greatest play in the world. That's just my opinion, Kevin. Okay, DJ wants to take a look at soy, S-O-Y. I never even heard of that one. Soyo Group, hell no, can't find it. If he says can't find it, it means it's not a stock in the U.S. stock market, so it might be somewhere else. Sorry. DJ, ACN. Interesting. I like this right here. High, low, where was it? Where is it? Look at the motion. Up, down, up. Basically, 253 is the current price. If you like it at 253, well, the 253 is actually going for 280, which is well over 1%. Now, today's Tuesday. Today's Tuesday or today Monday? Today's Tuesday. Tomorrow's Wednesday. So tomorrow's the middle of the week. So we have 3 days left of this week, which means 3 days left. And then the first month of the fourth quarter is done and over with. So next Monday starts the second month of the fourth quarter. Wow, they're really closing in fast, aren't they? So anyway, let's take a look at ACN. Look at right here, what's happening here. I like the last 30 days always gives me a good idea of where I think the stock is going next. Well, let's zoom on in. Zooming on in, right there, here's your last 30 days. Okay, she shoots up, pulls back, shoots up. That's it, it shoots up. How far up is it going to go? Well, take a look from here. 234 to 254. That's 20 bucks. That's what, 8-9%? It's that 8 or 9% right there. Can it keep going up? Yeah, it can. But is it going to? The last 30-day high was right here. Do we really think it can go higher? It might. You just never know. All right. Can't really hear. Why can't you hear? Terribly sorry there, Sarah. All right, so do we like it? Is it something that we want to jump in on and take a look at? Market crash incoming, yes or no? Of course it is, Lewis. Always. Is always a market crash coming. Best earnings source. Austin, good evening. Liquidity grooves. You have to watch it while your screen is in front of the mirror. You know, kind of like, oh yeah, fine. Funny. All right, what is the point of this? Danny, thank you very much for that. All right, that being said, snow upside. Uh-oh, snow. RR moves today. No, I hope you have a great night. I'm off. Great. Wonderful. What do we have here? Here we go. Here we go. We got some good ones. ACN, we just looked at that one. Index funds. No, I don't do index funds. JMAIA. What is JMIA? JMIA. Interesting. Okay, well, let's take a look at it. Here's your high, here's your low, here's where it was, here's where it is. Look at this. Drops, shoots up, pulls back. Now she's going up again. It might be interesting. The 1150 is going for 40 cents. I don't like the zeros right here, because if you're wrong, you get nothing. Sorry. Cincinnati, good evening. AG wants to take a look at Q. I don't like the Qs. And the reason why, let me just show you exactly why I don't like the Qs. All right? Who came up with that one? AG. Now, AG, behind me, you're going to see what is called Yahoo Finance. You really should have your fingertips and the ability to check on any financial information. Austin. Cool beans, Austin. Good for you. So, AG, let's take a look at how consistently profitable is QQQ. Okay, right here. Invesco, QQQ Trust, $632 per share. Now, what I like to do is I like to jump in and take a look at what the dividends are. Have the dividends increased? And the reason being is I'm looking for companies that are consistently profitable. And the only way you're going to find a consistently profitable company is taking a look at either 20 years of their quarterly reports or annual reports to see, how profitable they are, or taking a look at the dividends, because the dividend is a portion, small portion of the company's profits. And as the company is consistently profitable, the dividends go higher and higher and higher. Now, as the profits decrease, so do the dividends. So if you're looking at a company's dividends and one year they're dropping and another year they're going up, which one do you prefer? Well, I'm a firm believer in companies that are consistently profitable and consistently performing at top level. Well, those dividend kings, 5 decades of increased profits. I mean, that tells you right there. Dividend aristocrats, 25 years of increased profits. The same thing with the dividend champions, 25 years of increased profits. I know the rules are a little bit different for the aristocrats to the champions, but they both have 25 years of increased profits. And then just for the tail end, we're going to throw in the dividend contenders. Now they have 10 years to 24 years of increased profits. Increased profits means every single year the number gets higher and higher and higher and higher. That's my opinion on what consistency of profitability actually looks like. So let's take a look at the last 2 decades of the Qs and see, is it consistently profitable? So 20 years ago it would be 2005. So here's 2005 right here. Okay, the very first dividend, 2005, was June 17th, 2005. Okay, that dividend was 3.5 cents. Okay, it's a starting point, 3.5 cents, first dividend. Second, 10 cents. Now that's a nice increase. That's like a 200% increase in profits. Well, that's awesome, right? Third dividend, 2.9 cents. So how did it go from 10 cents, okay, a 200% increase to 10 cents, drop down to 2.9, which is a 66% decrease? So how is that? Okay, AG, you should know, you're the one that recommended this thing. Okay, so let's take it simply. 3.5, 10, up, down, 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 up, down, up, down. Do we need to keep going? Because basically that's what the Q looks like. One time they're profitable, one time they're negative. Profitable, negative, profitable, negative, profitable, negative, on and on and on. We can keep going because this is right here, 2007. So let's keep going. 2007, all right, today's 2008, right here. 33, 34, 28, down, 43, up, 49, up, 44, down, 41, down, 73, up, 51, down, up, down. Why would you invest in a company or an entity? Even the Qs, it's not consistently profitable. So why would you do it? I don't know. Coy, I'm going to ask you the same thing. Kyle, let's take a look at Coy. Don't even know who they are. Coyy. Let's see how the dividends look. Because the name of the show here is Dividend Investing for Weekly Cash Flow. So here it is right here. Granite Shares Yield Boost Coin Coyy. All right. What do the dividends look like? Okay. Okay, wait a second. Hold on. This thing is not even a year old, Kyle. The very first dividend was August 1st. That was the very first dividend, August 1st. That was this year. That was last month? 2 months ago. So Kyle, Coyy. 2 months ago. 84, 72, down. 73, up. 69, down. 68, down. 54, down. 55, up. 53, down. 51, down. 50, down. 49, down. I'm not seeing the profitability there. That's going backwards. Okay, if I'm going to invest in anything, I want the investment. I want the investment to be a successful investment. I want to make more money year after year after year, not going from 84 to 72 to 55 to 50 to 49. You started out at 84. Now a couple months later, you're at 49. That's a 50% drop. Why do you think that's good? 50% drop in what? 25, that's just a few months. TQQQ. Do we really need to see TQQQ? It's going to be the exact same. TQQQ. Same thing. Just same. Wait a minute. Same fleas, different dog. Do you remember that line? Same fleas, different dog. Okay. So, 2014. 15, nothing in 16, nothing in 17, nothing in 21. What are we missing here? All right, we're going to get out of that one. I'm just going to say no to the Qs. Sorry, dude. AG, the Qs, no, dude, they're just not consistently profitable. They go up, they go down, they go up, they go down. Why would you invest in something that's going the wrong way? What is the screen you are looking at next to your charts? Ron, the screen I'm looking to next to my charts, this is called an option screen, option chain. Options, stock options, calls and puts. That's what that is. 8. 6, there we go, 6, that's better. All right, so Ron, you're new here. We buy dividend stocks and we sell covered calls against them using stock options. Sarah Scott, I hope you're having a great night. Have a nice night. Thank you very much. Thanks for stopping by. So let's keep on going. Oh, he just cleaned up the beard a bit. Kind of like Politica, same bird, different wings. Haircut last week. Thank you, David. Can you look at BMNR? Why? We looked at this before. It was a no the first time we looked at it. What makes you think it's going to be a yes now? BMNR. All right, who came up with this one? BMNR. I can't even say it. It's going to be, okay, there it is right there. Isaac Newton. Yeah, lovely. This thing's at 50 cents a year ago. So It was at 50 cents. It jumped up to 160. Now it's down to 52 and going sideways. Now, don't get me wrong. If you bought it a year ago at 50 cents, okay, and she jumped up to 150, well, good for you. That's not something that's predictable. That's not something that's consistent. That's not something that's repetitive. That does not happen every day. So why are we looking at it? It's not something we can look at and say, hey, maybe it will do it again. No, it doesn't happen that way. Very rarely does something go from 50 cents and shoot up to 160 within a couple of weeks. That doesn't normally happen. So why are we looking at it? It's beyond me. Okay, Hercules like that VFC. I'm not sure where to find effective earnings. Austin Walker. Okay, to find effective earnings, you actually have to go to either the physical website for the company which you're looking at, and then you look under the quarterly reports or the annual reports. Because if you're a stockholder, you are entitled to that information. Is an Ethereum treasury company, they're growing their holdings each week. Okay. Are you making more than $10,000 a month, sir? Yes, Mike, thank you for asking. Send them over to the ocean. All right, thank you there, Samuel. All right, so Ron, what is the screen next? Okay, this, like I just said, is option chart, option chain. That's what that is. What site is that? What does it consist of? Who said that one? Austin. What site is this? This is Think or Swim. Okay, it's not a site, it's a trading platform where we buy and sell stocks. What about Walgreens? Oh, Walgreens got bought out last year. WBA. But since it got bought out, we've been staying away from it only because it went to monthly options. Monthlies now. So we don't do Walgreens anymore. Now, we did Walgreens last year and the year before. It worked out great until it got bought out. Once Walgreens got bought out, it was no longer attractive to trade. Okay? Sally, good evening, Miss Sally. She wants to take a look at Verizon. VZ, Verizon. Here we go. Now, Verizon did come up as an opportunity this week. Let's take a look. First thing I always want to see is the chart. The high, the low, where was it? Where is it? Where's it going? Up, down, sideways, down, now back up again. That right there is giving me a good idea of what do I think it's doing next. But, Sally, before we do that, rule number 5 is always check the numbers and make sure the numbers work in our favor. So I'm looking to get 1% every week. So if I'm going to buy a Verizon, I'm paying $39.32. Well, $39.50 is going to be the closest one, and it's paying 75 cents a share. That's just below 2% if you like Verizon. So, Sally, strap up. Let's take a gander at this baby. All right, first thing I want to do is take a look at the chart. I'm going to need the glasses for that one. Get my drink out of the way. All righty, a year ago, Verizon is at $41.50. Now, the bottom of the year was the second week of January 10th. That's $37.54. Now, she shoots up to the high of the year in the first week of March. But from there, she drops, goes sideways for quite a bit. And now look at the last 30 days. Because the last 30 days is going to give us a good idea of where do we think it's going next. Why waste your time with YouTube then, sir? 10,000 a month trading profits, you're doing exceptional. Well, Mike, I appreciate that. Thank you very much. I'm here to do a video diary for my children and my grandchildren because I'm not delusional thinking I'm going to be here forever. At some point in time, everything up here is going to be mush and I won't remember any of it. Okay? I had a nice conversation with my mom. And those conversations are very short. So now mom's in her 80s, I'm in my 60s. Okay, so it's not that far away. I'll be mumbling gibberish. So the best thing to do is to get everything I have up here. out on video. So my children, my grandchildren will have something. Because Papa G, that's me, I lived an interesting life, so to speak. Okay, a path less traveled, so to speak. All right, I was brought up on welfare. We were dirt poor. Seriously, dirt poor. My father left in the 60s, never paid any child support. So mom raised 6 kids on welfare until she married my dickhead stepfather, who did some unspeakable things, and we just don't talk about him anymore. But besides the point, out of all my brothers and sisters, there's only one of us that's still on government assistance, and that's because he lost his hearing. Other than that, all my brothers and sisters, we were brought up on welfare, but we all own our own businesses and we all own our own homes. So the little minor help that we got growing up in the 60s and 70s from welfare, well, we kind of turned around to where we are nowadays. Now, I'm doing this as a hobby. I retired 2 years ago. So I first started investing back in the 90s when when I got out of the service. I started my own company. Okay, believe it or not, I was a CEO. I had 26 employees at one time. Okay, life was great. Life was wonderful until it wasn't. You want to be humbled? Do stupid shit, and then God will, or whoever you want to call your higher being, He will humble you. She will humble you. Whatever. And I lost everything and had to start over again. So now all the money I have accumulated in my lifetime, whatever that was, okay, as of 2 years ago, I decided I can bring in enough money based on what I have been doing over the last 10, 20 years. Because you can go into any one of my social media sites, it'll take you right back to YouTube, and you will see that I have over 1,200 videos on YouTube going all the way back into 2011. So I've been doing this for a while. So they say if something works, you leave it alone. So in 2008, hold on a second. In 2008, when my 9-year-old daughter says, "Daddy, what are you doing? Can you teach me?" So when your 9-year-old daughter asks you to teach her something that not very many people understand, because adults don't even understand this. Okay, I get questions from adults all the time trying to ask me to simplify it for them. It took 15 minutes for me to explain it to my 9-year-old daughter. Because here's the funny thing about adults and children. Children will believe whatever you tell them, and if it works, fine. They will believe it and they will do it. Adults, they're just a little bit fickle. Because it is easier to teach a child something than it is to teach an adult. Adults don't want to admit that they're wrong. Adults don't want to see something right smack dab in front of their face. They don't want to admit it, that it's there. Well, it is. So for a 9-year-old, okay, simple, safe, predictable, consistent, and no way for her to lose. That was the rules. That wasn't the rules, sorry. That's the criteria. So now I have to come up with 5 rules to go along with that criteria. Well, and they were pretty simple. 5 rules. If you stick to the rules, you should be okay. You should be fine. Rule 1, never buy something you don't understand or you don't want to hold on to long term. That's rule 1. If the stock is at $100 and you buy it at $100 and it drops down to 2 and you decide to sell, well, you didn't pay attention to rule number 1. Never buy something you don't want to hold on to. Rule number 2 is never sell at a loss. So yeah, again, if you bought something at 100 and drops down to 2 and you sell, you take that loss, you consciously decide to take the loss. You never lose money until you agree to sell it for less than what you paid for it. And then that's on you. Okay, rule 1, never buy something you don't want to own. Rule 2, never sell at a loss. Rule 3, make sure the company is consistently profitable. Okay, yeah. Preston, talking to you. Talking to you, Kyle. Talking to you, AG. Okay? SB1981. Talking to you. Take a look at the profitability of the company. The quarterly reports, the annual report. Heck, take a look at the dividends. If everything is increasing, fine. ULTY, same thing. Brother, check the numbers. Why are you investing in something that's not continuously profitable? We checked last night, 10,700 different companies. 10,700 different companies. I only look at 300. because I'm looking for consistency of profitability and weekly options. That's the only thing I'm looking for. And it's so weird. Think about it. Say it out loud. Consistency of profitability. Do you know how silly that sounds? To think you want to invest in a company that's consistently profitable. Why is it silly? Because anything other than a consistently profitable company is just a ridiculous idea. But they have great potential. Terribly sorry, I'm retired. Great potential doesn't help me pay my bills. So let me reframe this just a little bit. If you are here looking for anything other than simple, safe, predictable, consistent weekly cash flow, you're definitely in the wrong place. Okay, I don't do cryptocurrency. I don't do Forex. I don't do futures. I don't do any weird stuff. Dividend stock investing for weekly cash flow. I'm retired, so I'm relying on my ability to take my money and trade it successfully. I only have two criteria. Isn't that weird? Only two criteria: consistency of profitability and weekly options, weekly cash flow. That's what I'm looking for. Consistency of profitability and weekly options. That's it. ULTY? Hell no. Brother, please check the profits. Check the profits, ULTY, and then check how long they've been in business. Okay, the stock market's been around for over 425 years. 425 years. I don't think 2 decades is a lot to ask for companies that are consistently profitable. As a matter of fact, there's one of them that's over 200 years old, Consolidated Edison, and it's still paying dividends. IBM, good company. Bank of America, over 100 years old. Ford, over 100 years old. Harley Davidson, over 100 years old. General Motors, over 100 years. General Electric. I was going to say Berkshire Hathaway, but no, that's not true. Mine's going. Mine's one of the first things to go, and that's not a good thing. LAD, Ithia Motors. Never heard of it. So if I've never heard of it, it can't have been around for 20 years. I appreciate the channel. Thank you very much. Thank you for your service, James. Thank you, Samuel. Thank you, Mike. Simple. Consistency means succeed sincerely. Thank you, KNT. The key word he just said, trade sincerely. Okay. Thank you there, KNT. The number is right. Sell it. Okay. Apple worth investing in. Marika, give me a second. We'll take a look at Apple in a second. Hold that thought. All right, so let's get back to where we were, and let's get back to what we are saying. So SB1981, let's take a look at SLG. What the hell is that? SLG? SLG. Hell no. Okay, so SB1981. November, December, January, February. These are months of the year. Basically, that means that is a monthly optionable stock. Means I can trade it successfully 12 times a year. 12. 1, 2, 12. 12 times a year, that's it. And if I'm making 1 and 2% with each trade, because I do a very simple, easy trade. It's very simple. It's very easy. It was created for a 9-year-old. And I know a lot of people say, why are you doing that? Because it works. I'm terribly sorry. And the funny thing is, I'm not even trying to sell you anything. You would think that I would say, hey, I got this great idea. Why don't you buy this? I got this great book. Buy this. No, you're not going to hear me say that at all. I'm just sharing information. That's all I'm doing. Okay, we're all adults in how it works. All right? Your screen cannot see anything. DB, you can't see that, DB? I don't know why you can't see it. Let's keep on keeping on. What else do we got? What site is that? Okay, Dividend Stock Talk, BMNR. Nope, 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 nope. All right. John, Skip Ford announced they're splitting in December for a 15 call. Well, 15 cents a share. Okay, cool. Is this the real thing? Kill them nicely. How are you doing today? All right, so I want to look at stocks that have weekly options, please. Companies that have been around for at least 20 years. ULTY, no. QQQ, no. JQQQ, no. YQQQ, no. None of that crap. Look in a financial website, whichever financial website you use. And if you're investing, you should have a financial website. What is it you're looking for? You know what I'm looking for. I'm looking for simple, safe, predictable, consistent 1% per week. Dividend investing for weekly cash flow. And that requires dividend stocks with weekly options. Okay, now we check once a week. How many stocks are there? Well, last night, 10,710. That's a lot to choose from. I only look at about 300 because that's all that fits. If I go into a store looking for a nice shirt, a hat, and a pair of shoes, great. They may look lovely. The price may be awesome. But if it don't fit, no, that's a no. It's actually that simple. If it doesn't fit, if they're not profitable, if they have no dividends, if they have no options, no. There's 10,700 different companies. Why are you putting your money wherever you're putting it? What's the reasoning? Is it consistently successful? Anyway, let's keep on going. All right, SLG. What the hell is SLG? We already said no to that one. LNTH. I'm a mini beach. LNTH. What the hell is that? LNTH. Lantheus Holdings. Hell no. Weren't you listening also? Okay, Chris Armstrong, SMR. What the hell is that? SMR. New Scale Power. Interesting. I don't know anything about them, so I really can't tell you, but let's take a gander. You ready, Chris? First thing I want to look at. High, low, where was it? Where is it? Up, down, up, down, up, down, up. 42.12, 42. The 42 is going, oh, hell yeah. It kind of makes me wonder, though. With the premium that high on a Wednesday, I'm willing to bet this company has no dividends. To find that out, well, let's go to YouTube. Not YouTube, Yahoo. SMR. SMR. Give it a second. There it is, New Scale Power, SMR. Oh, look at that, I was right. There are no dividends. That's why the premium is so high. Now, the reason why I like dividend stocks, okay, because there's two different kinds of companies, all right? When the company is profitable. Now, remember, every company is out to do the exact same thing, to make a profit. That's why they go into business. I mean, that's why I went into business, to make a profit. Who's that? Magic Hat, thank you for that. To make a profit. What happens when they don't make a profit? Well, when they do make a profit, they get two choices. And this is what differentiates those 10,700 companies. Well, half of them will take all the profits and put it back into the company for capital growth. That means the stocks go higher faster. If that's what you're looking for, you're definitely in the wrong place. Sorry, that's not what this website or this channel is about. I'm not looking for the next Netflix. Start out at 5 cents and then take 30 years to go up to $1,000. Well, I'm not going to be here in 30 years. I'm not delusional. Come on, I'm 61. I'm going to be 62 in a couple of months. Okay? 30 years, I'll be 93, 92. You think I'm going to be this when I'm 92? No. You think I'm going to remember everything when I'm 92? I had a conversation with my mother. She's in her 80s. She's 84. And she has a hard time remembering things. So I'm not delusional thinking in 30 years I'm going to be sharp as a tack. No. She ain't going to happen. So I'm looking for a simple, safe, predictable strategy. And it was funny how it happened because it wasn't planned. Okay? Daddy, what are you doing? I'm trading, honey. Well, Daddy, can you teach me? Most adults don't get it. They don't. They make it complicated. It's hard to make 1% a day. Kill them, I'm not doing 1% a day. I'm doing 1% a week. Okay, 1% a week is easy. James, love the program. Can we look at Clorox? Ron, Clorox is a dividend king. That means Clorox is over 100 years old and it has over 5 decades of increased profits. Ron, I'd love to look at Clorox. Come on down. Let's take a look at Clorox. Johnny, tell him what he's won. Well, Bill, today he's won a special guest appearance. Okay, here we go. Clorox CLX. Ooh, ow, damn, hell no. Sorry, Ron. It's going to be a no for this week. And the reason it's going to be a no, we ready for this, Ron? Number one, it's a monthly. Means they only have options available to trade once a month. That doesn't work for me. Okay, I want once a week. Sorry. Second, baby's dropping like a rock. Now, this could be good, Ron, if you're looking for that bottom. Okay, so 2 weeks ago, sorry, 1 month ago, we're here, 125. And then we dropped down to 115. That's where we're now, 115. Right? This is the bottom of the year. You make money buying low and selling high. And the funny thing is about the bottom of the year, you can't get any lower than the bottom of the year. But is this the bottom? As of today, this is the bottom. We have no idea what's going to happen tomorrow or Thursday or Friday. It could go lower. Think about it. It could go lower. Okay? Dropping, 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 dropping. What we're looking for is a point where people, investors like you and me, we say, wait a minute, Clorox at $100, hell yeah, I'm going to buy some. What is that number? Because she's going to keep dropping until they find it. Right now it's at 115. Is it 108? Is it 104? Is it 97? We don't know until it reaches that point, turns around, goes back up again. If you like Clorox. Oh, shit. Somebody wants to take a look at NVIDIA. You've got to be kidding me. Energy transfer. You really got to be kidding me. Fang. Oh, my God. Don't you guys do any research? All right, let's go. Where are we? Okay. Ali wants to take a look at Tootsie Roll. Believe it or not, Tootsie Roll is a dividend king. 5 decades of profits. Unfortunately, monthly. Don't do monthlies. Sorry, dude. Chris Armstrong, thank you. Boba, any thoughts on K-View? Ooh, as a matter of fact, we looked at K-View this morning. Always appreciate your insightful comments. Thank you there, Boba Johnson. K-View. We actually looked at K-View this morning. We did look, some poking and prodding at it. Here we go. Here's your high. Here's your low. Here's where it was. Here's where it is. Look at this. Sideways down. That's about it for K-View. However, the numbers, 1451. The 1450 is going for 27. Just a smidge below 2% if you like K-View. Hold on. But what did we see here? Look at the last 30 days. Okay? Down, up, down, up, down. So it's definitely in a downward trend for the last 30 days. Not something we want to jump into. Terribly sorry there, Boba. But don't get me wrong. Okay? Give it a little bit of time, and you'll find the bottom, and she will turn around. So I like K-View. It is on my list. Oh, boy. Market crashers. Snow. Hell no. Dude. What can we possibly do with that? It's at the high of the year. When have you ever heard anybody say, hey, look at snow. It's never been this high. Let's buy some and hope it goes higher. Terribly sorry, I don't play that game. This thing was down at 120 a year ago. Now it's at 260. That's over 100% increase. How much higher do you think it's going to go before there's going to be profit taking? That is not a game I want to play. Look at all this space from the bottom here, bottom of the year, all of that. Sorry, no. Nick, RR. What is RR? Hell no. Okay, I don't know what is it with you guys in these stocks that were 50 cents a year ago. Now it's at $7. That doesn't happen all the time. When I said simple, safe, predictable. That, my friend, is not predictable, and it's not consistent. So, no, that doesn't really happen that way. All righty. Mr. Unemployed, back again. Woohoo! All right, way to go. Uh-oh, Brown Water wants to take a look at LYB. What the hell is that? LYB. Leiden Del Basel Industries. Hell no. I don't do monthlies. It just doesn't pay. Sorry. All right, I'm a mini beast. LNTH. What the hell is that? LNTH. Lathius Holdings. Hell no. SLG. Did we look at SLG? SLG. Hell no. Clay Browning. Thank you very much. You're welcome. You're welcome. You're welcome. Vanessa. How are you, Vanessa? Mr. Unemployed. Thank you. Clay Browning. Thank you. RC. Ooh, RC. I love this. Okay, see, people always ask. Not always. I think I get this question maybe once every 6 months. So, RC says, this is what RC says. Do you have a 7 Series license to give investment advice? I'm going to say no and no. No, I don't have a 7 Series license. And 2, no, I don't give investment advice. Okay, you're misinterpreting observations as opposed to investment advice. An observation is nothing more than, here it is, right there, SLG 5319. Here's the bottom, here's the top, here's where it was, here's where it is. Look at the motion. That's nothing more than an observation. That is not investment advice. Also over here, 5319, these are monthly options. I don't do monthly options. That's not investment advice. That's more of an observation. Plus, I sing and dance. Tra-la-la. So, no, I don't need a series license in order to observe and repeat what I'm reading. But thank you for that, though. Where do we look up dividend history again? You can find whatever financial website you want, Cliff. I use Yahoo Finance. Okay, now Yahoo Finance is pretty simple. Okay, when I want to look up dividend information, I go first to historical data. Okay, then when I get to historical data, I click on this little tab right here. This little tab says historical prices, dividends only, stock splits, or capital gains. I can look at any one of these bits of information, but I like dividends. Now, I could look at 20 years of quarterly reports and see how often they look to be profitable, or I can just go right to the dividend, because the dividend is a portion of the profits. And if that increases every year, well, common sense and logic says, if you make more money, you're going to give more money to the investors through the dividend. Come on, that's logical. That's common sense. If you make more money, the investors get more money. Okay, if you're giving the investors less money, guess what? You're making less money. See, it works both ways, however you want to look at it. I only like companies that are consistently profitable. And there's plenty of them. There's over 300. So why do I need to look at any more of them? All right, let's keep on going. Cody Malik. Hey, thank you, Cody. Just another trader. QQQ is a NASDAQ ETF. I'm well aware of that, thank you. But also, QQQ and NASDAQ ETF is not consistently profitable. You can call it whatever you want. You could call it a refrigerator on training wheels. Call it whatever you want. If it's not profitable, it's not consistently profitable. It's just plain and simple. Okay, Kellum Nicely. I'm not looking for 1% a day. I'm looking for 1% a week. Ron, thanks. Love the program. We already did Clorox. Which Chris is that? I don't want to point out. No dividends. Thank you, Kodum. Pistachio. Is that really your name, Pistachio? Uh-oh. There it is. How have the option chains... Wait a minute. How'd you have the option change next to the chart in Thinkorswim? You mean like that? That screen right here. If I tap on that right there, it disappears. Watch this. La la la, right there. Oh, now it's gone. Now it's right over here. I click on it again and it reappears. Okay, there you go. It's part of one of the many attributes that Thinkorswim has. There's a lot of cool stuff on Thinkorswim. There is. Magic hat. Thank you for that, Magic hat. All right. DCB wants to take a look at WCP. What the hell is that? WCP. WCP Resources Limited. Hell no. Can't find it. Anytime it says we cannot find this symbol, that means it's not a U.S. stock or it's not a company at all. Can we more in money in covered calls? Cliff, can we more in the money on covered calls? I have no idea what that means, Cliff. Kill 'em. You can always get a new low. Yes, you can. Uh-oh. Our lad, Misty, apparently you're not listening either. Can you do monthly once a month, though? Yeah, that's why they're called monthly. You can do them once a month. Uh-oh, Douglas J. Needles wants to take a look at Kimberly-Clark, KMB. Well, that is a lovely company. Check it out. Here's your high, here's your low, here's where it was, here's where it is. Look at this. Down, up, down, up, down. Now she's going up. 120.66. The 121 is going for 91. The 120 is going for, and no, we're not getting our 1% this week. However, there's only 3 days left. So let's take a look at next week. See, Wednesday is one of those days where I change my rules a little bit, only because it's very challenging to get a full 1% on a Wednesday. Why do I say that? Well, think about it. We're doing what's called weekly options. I don't know about you, but the week starts on Sunday and ends on Saturday. That's the week. But there's no trading on Saturdays and Sunday. So a trading week is Monday through Friday. Well, guess what? Monday and Tuesday are gone. 5 days. Monday's gone, Tuesday's gone. We've got 3 days left. Do you know what that means? I lost 40% of the potential money that I could make on the time value. Because time value Monday morning to Friday afternoon is 100% of the week. Monday morning, Friday afternoon, that's 100% of the week. Monday's gone, that's 20%. Tuesday's gone, that's 40%. We got 60% left. More than likely, we're not going to get a good fill on a Wednesday. So we'll take a look at next Wednesday. And if I'm looking at next Wednesday, I want to get 1.5%. If I'm wanting 1% a week, well, half the week is already gone, so I still want that 0.5%. So I'm looking for 1.5% on a Wednesday. 121 right there, 120. It's only 1%. I might let it slide because it's 120 to 330. That's a big spread. So I might be able to get 1.5% out of that. All right, well, let's take a closer look. A year ago, hold that thought. A year ago, Kimberly-Clark at 135.68. The high of the year was the beginning of March, and that was 150.67. From there, she just drops down to the bottom. The bottom was last week. The bottom of the year for Kimberly-Clark was last week. Now, we said it before, you can't get any lower than the low of the year. So here's the last 30 days. She went up, she went down. She went up, down, now she's going up. Here's your 30-day high. Here's your 30-day bottom. 1, 2, 3. That's what I'm looking for. 2 days up. On the third day, I will jump in. I didn't do it today only because all my money is usually invested on a Monday. So even though it shows up today, I don't have any money to do it because all my money's invested by Monday. So the rest of the week is just balancing act. What did I buy? What did I sell? Where's it at now? Should I do anything? Or should I just wait? Well, we took a look this morning, and a lot of the stuff, I just got to wait. That's it. Because when you buy a stock and then you use what's called a covered call to sell it, the person at the other end of the equation has the right to buy it at any time they want until that option expires. Well, that option is not going to expire until Friday afternoon at 3:59 p.m. because at 4 o'clock, you can't do anything. That's it. So whoever bought the options from me, they have any time, tomorrow, the next day, or the next day, to do whatever they want. And if they don't, they lose all that money they paid. And I'm perfectly okay with that because they bought something, I sold something. Everybody's happy, so to speak. Oh, okay. So anyway, let's do this one because we haven't done anything yet today. Let's do one. Why don't you go more in the money if you're right? Cliff, sometimes I do. Because Cliff, I prefer safety over profitability. So if I go 1 or 2 strikes in the money, well, it's a safer trade, but I still want that 1%. So if I'm looking at this right here, the 120.66, the 121, okay, well, the 121 is going for 120. That's giving me 1%. Now, if I do the 120, I'm getting 310. Well, that's better because I'm only losing 65 cents. Take 65 cents off that. Now I'm making over 2 cents. So I'm going to do the 120s for next week. Let's see what it looks like. Okay, let's go. Let's do this. Okay, let's get rid of this. Let's change this from single to covered call. So if you guys remember I said simple, safe, predictable, consistent trade? Well, the simplest trade is just buying the stock. Hey, let me buy the stock. That's the simplest one. But the flaw with that is you have to wait for the stock to move, and then you have to decide where's your exit point. Well, with a covered call, it's a lot easier. You don't have to wait for anything. So if I'm doing the 120, okay, for next week, okay, not 31 October. That's this Friday. See, 31 October, that's this Friday. 7 November, that's next Friday. All right, I got to prove that I'm human. What if I'm not human? All right, there we go. Let's do this. All right, so we're going to do the 120 for next week. There it is right there. All right, just one contract. Now, the reason why I'm doing just one contract, because I'm giving you guys the benefit of the doubt. Meaning, I'm going to show you what one looks like, and you're going to think to yourself, all right, well, I have this much money. Maybe I can get 4. Maybe I can get 2. Maybe I can get 115, because we all different, and we all have a certain amount of money to play with. I have no idea what you got. You've got no idea what I have. Well, you would if you actually followed along with all my trades. You'd have a good idea. But anyway, here's the order right here. Buy one covered call, Kimberly Clark, KMB right there. 100, which is the weeklies. 7 November 25. That means this option trade expires next Friday. So if I buy the stock first thing in the morning, 119.95. Oh, here's right here, 120.65. 119, 120. So that's the difference between the two. That's called the spread, the difference between the two. All right, so the 120 call option against the stock at the market. Here's my max profit, $290. Now, remember when I said simple, safe? Simple, it's one of the simplest strategies. The simplest being just buying the stock, but then you got to wait for the stock to move in order to get out. Then you have to wait. Well, here, I don't have to wait at all. It's simple, but not as simple as just buying the stock. So I'm buying the stock, and then I'm selling the stock. So I'm buying it and selling it at the same time. Isn't that weird? I'm buying it and selling it at the same time. I'm buying it for 120.66, and then I'm selling it for 120. I'm actually selling it for less than I'm paying for it. So here's my thinking. You ready? Okay. So if between now and next Friday the stock goes up, I make 290. If the stock goes absolutely nowhere, just flat for the next week and a half, means it stays exactly where it is, 120.66, doesn't move at all. I make $2.90. Same amount. If the stock goes down just a little bit, right now it's at 120.66. If it drops down to 120 even, I still make money. So the stock can go up, sideways, and down just a little bit, and I'm still making $2.90. Okay, does it really matter what the stock moves? In this situation, no, it doesn't. Well, it's in an upward trend. That's always good. Remember, we looked at the chart. It's in an upward trend. It's bouncing off that bottom. Now she's going back up again. Great. How long does it have to go? Well, 5 days. Well, no, 7, because we did next Fridays. So as long as the stock is above 120 by next Friday, I'm fine. I make my $290 for each contract that I do. Next. Now, that's profit. Okay, remember why I said simple? It's a simple trade. Safe. Now, you may not think that this is a safe trade, but the federal government does. The federal government will actually allow you to do this trade in your IRA. There's some trades you cannot do in an IRA, but you can do a covered call. Predictable. Remember I said predictable, simple, safe, predictable. I know exactly what I'm going to make before I even do this. I know what it's going to cost me. I know what I'm going to make. That allows me to figure out what my rate of return is. Now, before you came here, you were probably used to annual returns. Oh yeah, let me put this in there. I get like a 5% annual return. Terribly sorry. All that is just, you just forget it. Because here I'm investing for weekly cash flow. Weekly. So my language is a little bit different than everybody else's. Every night I will get somebody says, oh, this company's great. It gives a 5% yield. That's 5% for the year. That does me no good whatsoever because I don't invest a year at a time. I invest 1 week at a time. Okay, this week, I got next week. I got the week after, I got the week after. Now, hopefully I get next year and the next year, but I'm not aligning my trades in that manner. I'm aligning my trades for weekly cash flow. That means every single week. All right, so that being said, 290 is the profit. 11.7 is the investment. Let's see what the rate of return is for that. Calculator, 290, and we divide it by the investment, 11,710, and that gives me a grand total of 2.4%. 2.47. That's close to 2.5%. Well, if 1% a week is 50% a year, 2% a week is over 100% a year. This is why I don't do monthlies. Because if I do monthlies, 1% is going to give me 12% a year. Nah, no thank you. 2% will give me 24% a year if I did monthlies. But if I did weeklies, 2% a week would give me 100% a year. I don't know about you, but 50 to 100% is a hell of a lot better than 12 to 24. I just don't do monthlies. The numbers just don't work. Terribly sorry. So I like this one, so I'm going to save this. Okay, now I learned how to do this. All right. That, and then I do that, and then I do this. Come on. There it is, right there. Now, let's see what we just saved. Now, we said it was 2.4, right? Right there. There it is. There it is. There we go. Nice and big. Buy 1 covered call KMB. That's Kimberly Clark. 7 November 25. That means it's going to expire next Friday. The 120 call option against the stock at the market to open. Okay, here's my profit right there, 290. Here's my investment. Whoops. 290 is my investment right there. That comes to a grand total of 244. Okay. 2.47%. That's what that comes down to. So we are going to take it, put it there, put that over there, because that was last week. This was yesterday. This is today. 2.47. Let's see if we can find 4 more. See if we can find 5 a night. Okay, what did we find yesterday? Yesterday was AT&T, Marvell, Altria, Uber, and KView. Who asked for KView tonight? There's KView right there from yesterday. All right, so let's get back to where we were. Let's get back. All righty. I like that toy. That's a cool toy. All right. So Cliff Brown, that was further in the money. Terry Smith, how are you today? You want to look at Conagra brand, CAG's Conagra. It's hard remembering all this stuff. CAG for Mr. Terry. Mr. Terry, what do we have? Here's your high. Here's your low. Here's where it was. Here's where it is. Look at this. Down, sideways, down, sideways. We're at 1808. 1808. 1808 is paying 20 cents a share, but look at this. There's a couple of zeros there. I don't like that. I don't like having zeros 2 strikes out of the money. Because if you're wrong, 2 strikes out of the money, you get nothing. Remember that, Terry. Look at this. 2 strikes. Okay, at the money, it's 20. It's 1%. So 1 strike out of the money, it's 10 cents, which is 0.5%. 2 strikes out of the money, it's 0. So I probably wouldn't do Conagra because that looks horrible, in my humble opinion. Now, you know what looks good? Look at Dell. Oh, let's do this. Okay. Okay, look at Dell. Okay, it's 164. At the money right now, it's 340, which is almost 2%. 1 strikeout, over 1%. 2 strikes out, over 1%. 3 strikes out, 0.75%. 4 strikes out, you get 40, then you get 17, then you get 9, then you get 1. So 1, 2, 3, 4, 5, 6, 7. I go 7 strikes out of the money with Dell and still make money. Now, Conagra, 2 strikes out of the money, I'm getting nothing. So it's not always just the stock and the movement. And this is going to be a no anyway, Dell. It's at the high of the year, so no. But always take a look at what is my exit point. So if I jump in, I buy Dell at 164, I sell it at 165. If I'm wrong and the stock goes down, I have 6 strike prices I can make money on. Now, some stocks you can't do that. Energy Transfer. Whoops. Let's try it one more time. Energy Transfer. 0, 0, 0, 0, 0, 0. 0, 0, 0, 0, 0. AGNC. 0, 0, 0, 0, 0. 0, 0, 0, 0. If I'm wrong, I get 0. At least with some of the other stocks like Dell, eBay, Wells Fargo, Bank of America, 3, 4, 5 strikes out of the money, I'm still able to bring in something. Something is always better than nothing. It's 10 o'clock. Let's take some questions. Questions. All right. Saif Khan, so you only do touch stocks. I have no idea what touch stocks means. Why do I go more in the money? Thank you, Cliff. Roulade. How we go from 10,000 to 40,000 in 8 years. I have no idea what you're talking about, Roulade. Okay, 10,000 to 400,000. 10,000 to 400,000 in 8 years. I have no idea. I have no idea what you're talking about. But okay. Runa D. Can you look at SoFi? Why the hell would I want to look at SoFi? This is one of those heavily marketed entities. Let's call it that. Heavily marketed entity. So SoFi. Okay, this is why I think of SoFi. You ready? Who came up with this one? Runa. There are no dividends in the selected time period. And that's for SoFi. So if they're not sharing a profit, they're not a dividend stock. And if they're not a dividend stock, why am I looking at it? Jay Patriot, I don't think he's looking at this chat. No, Jay Patriot, you're absolutely right. I'm not looking at this chat. Sally, you didn't complete your analysis on Verizon. Uh-oh. Sorry, Sally. Let's check it out. Verizon. VZ. Oh, there we go. The last 30 days for Verizon. Right there. That looks pretty darn good. Okay. So here's Verizon. Who came up with this one? Sally? Okay. 39.32. The closest one's going to be the 39.50, and it's going for 75 cents. Well, that's a hell yes. Okay. Look at your last 30 days. 30 days ago, we're at 44. We dropped down all the way to 38. And there's our 3 days to the upside right there. Well, if I'm going to do it at 38, let's do it at 38. Oh, sorry, I mean 39. $39.50. There we go. One contract at the market. And here we go. You ready, Sally? This is what we got. Buy one covered call Verizon 100. That's the weeklies, 31 October. That's this coming Friday. So the numbers look good for Verizon for this week. The 39.50. Look at the stock price, 39.32. I'm looking at the 39.50. And what is it bringing me in? 80 bucks. What is it costing me? 3,800. Think of it as a vending machine, a gumball machine, a candy machine, something you pay for once, a weekly cash producing asset, if you will. Because I'm getting weekly cash flow from this every single week. And if I treat it like a cash producing asset, that means I'm going to look at it every day. Now, if it was a vending machine, I'd have to go to the stupid thing every day and make sure it's filled and dump out the money. Oh, boo-hoo for me, but it does take time. Okay, here, I can do all my trading in less than 10 minutes a day. That's the reason it was called the 10-minute trader. The 10-minute trader. Every video you ever hear me do is, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, where I invest in dividend stocks for a weekly cash flow, take you along for the ride for a simple, safe, predictable, the same thing, day after day after day. Okay, I'm looking for dividend stocks specifically because they are predictable and they do the same things over and over and over again. So they are boring. I do have to admit that. They are the same stocks over again, same thing. Okay, so Sally, here we go with Verizon. $80.50 to profit. We take that, stick it into the calculator, $80.50, and we divide it by the investment. Okay, 38.70, 3870 gives me a grand total of 2%. 2, Sally, if, of course, you like Verizon. And it's always going to come down to that last couple of questions. And it's always just a couple of questions gnawing at the back of your brain. Number one, does it make sense? Number two, do I like this company? It's Verizon. How could you not like it? Granted, you may not like their service, you may not like this, you may not like that, but ask yourself the hard questions. How long have they been in business? What is their market cap? What is their profitability look like? Are they consistently profitable? What is their book value? All these are very important questions that you should ask before you put them on your list. Okay? All right, anyway. 2.8. Let's save this one. Let's save it. 2.8%. 2%. All right. I'm going to get a little quicker with this. There, and there, and there we go. And up, and there we go right there. And I said it was 2%. Where is it? Wow. Little side. There it is right there. Little small side. There we go. Oh, I love this new little toy. All right. Buy one covered call Verizon, VZ, the 31 October, that's this week. The 39.50 call option stock at the market, blah, blah, blah. 80.50, there's the investment right there. Hold on, see if I can get this right. Oops. And then we said this was 2%, right? 2%. Love it. Nice. So we're getting along pretty quick, aren't we? All right. Terry, we looked at CAG a little while ago, and I can't believe James is new here. Okay, James wants to take a look at NVIDIA. Okay, James, are you ready? Here we go. NVIDIA. We want to go here. And we want to put in here, NVDA. Now, James likes NVIDIA. Now, I feel bad for you, James, only because if you like NVIDIA, then you like to be lied to. Okay, you like to buy something that's not really that good. Let me explain why. NVIDIA, last I checked, was $185. Oh, now it's $200. James, $200 a share. What are you getting in dividends? 1 penny. James, did you hear that? You're paying $200 a share, and as a dividend, as your share of their profits is 1 cent. Okay, hold on. It's actually worse than that. Hold on. Let's take a look at the summary right here. That right there. Summary. Oh, wait a minute. No. Let's look at statistics. Right there, statistics. Because, James, I think you'll be enlightened when you see this. You think NVIDIA's all that? Maybe it is. Maybe it isn't. Let's find out. Come on. There we go. It's right there. NVIDIA. 201. Now, what we're looking at, some details. All right. Revenue per share. You see that right there, James? Revenue per share, $6.76. So every single share they have out there, they're bringing in $6.76 per share in revenue. That's what they're bringing in. Okay, hold on. Book value. Book value per share. You ready, James? You see this? $4.11. Now, do you understand what that means, James? Okay, if the Supreme Court rules in favor of divesting and paying off all the investors, that $200 per share that you paid, you're getting $4.11 for that. That's the actual value of the company. They figure that out by taking everything that they own, everything they have coming in, all the revenue coming in, and they subtract it by all their debts and everything they owe. So, yeah, NVIDIA is worth $4.11 per share. Let me show you one, James, that you probably haven't looked at because you're going to buy whatever piece of crap they throw in front of you anyway. Let's take a look at this one. General Motors. Now, you're probably thinking, I don't want to do General Motors. Well, why is this not moving? There it is right there. All right, James, you ready for this? General Motors. Revenue per share, $189.95. It's $190 per share just in the revenue coming in from General Motors. Hold on, it gets better. Check this out. Book value for General Motors, $71. What's the actual price for General Motors? Come on. Okay. $69.87. So the stock is valued. The current price for the stock is $69.87. Sorry, $69.87. The book value is 61. Well, that's pretty damn close. The revenue per share is $187 per share. And you think NVIDIA is better? NVIDIA is worth $4.11. The dividend is 1 penny. Anyway, no, I don't like NVIDIA. Let's keep on keeping on. What do we have next? Terry, I'm in 15,000 shares of CAG. Why, Terry? Why? And here we are back at the beginning. What? Oh, sorry, I was doing the wrong thing. So you got how many shares? 15,000 shares, CAG. Ouch. Ouch. Okay, 30-day high, 30-day bottom, up, down, up, down, up, down. So if you got that many shares, why aren't you selling covered calls against them? If we're at 18, the 19s look pretty safe, and the 19s are paying, holy cow, nothing. That's why I don't like it. Because look, okay, CAG, it's down here at 18. You definitely don't want to sell the 18s because you can get called out. You don't want to sell the 19s because that might be too close also. But look, the 19s are giving you nothing. One of the reasons why I don't like CAG. Sorry, dude. Nope, I do not have CAG because the numbers just don't work for me. Ready to shred. Hi, can you summarize your option strategy? Ooh, love to. You ready? Gotta take a deep breath for this one. Basically, what we're doing here is we're investing in dividend stocks, specifically pre-qualified dividend stocks, and those are companies that are consistently profitable for at least 2 decades. That's 20 years. We buy it just before the EX date, and then we do it one of the simplest trading strategies called a covered call just before the EX date to capture their 1% on a weekly basis. How's that? Extern wants to take a look at Macy's. Hell no. Don't get me wrong, I actually have some Macy's, but I'm saying no only because it's at the high of the year. That's it. Love your understanding. Thank you very much. Extern. Extern? Okay. Kohl's. KSS. Kohl's. Now I actually have some Kohl's also. Okay. The high, the low, where was it? Where is it? Look at this. Down, up, down, up. Now she's coming back down again. Okay, let's go in a little closer to see, does it make sense? Okay, so here's your last 30 days. Down, up, down, up. Now she's coming back down again. Well, she was at 14, then she jumped up to 17. Now, do you understand what that means? And it's not that different. Now, you may look at it and say, all right, it went up, down, now it's coming back down again. No. What you're missing is the low right here. So when it's this low, somebody bought it there. Someone bought it right there, 14 bucks. Okay, it shot up to 17.20. Okay, so from 14 to 17, it's only $3 move. And you're probably thinking that doesn't mean anything. Well, it does on a $14 stock, because on a $14 stock, that right there, my friends, is a 20% move. You have to go based on the price of the stock at the low. That's 14 bucks. She shoots up $3. $3 is not a lot, but $3 on a $14 stock is 20%. You buy something and it shoots up 20%. If you don't take your profits, that's a you thing. I'll take profits at 3 to 5%. I'm only looking for 1. I'll take 3 to 5 if she shoots up. Okay, but I will not get into a stock after she already jumped up more than 10%, because that opportunity is come and gone. Because there are a lot of people out there just like me. And some of you in the audience too, you'll take profits at 5%. You'll take profits at 10%. Well, this here, that's 20%. Don't get me wrong, I actually own some calls, okay? And I rolled mine into the next week, and I'm collecting my 1 or 2% every single week on my calls. So I have no intention of getting rid of it. I just don't plan on buying any at this moment in time. This is helpful. The financial plug, 97. Well, thank you for that, I believe. Uh-oh, it's time to sit down because I have over 100 questions to go through. Oh, my. All right, what do we got? Could you summarize your option strategy? We just did that a little while ago. All right. Chuck wants to take a look at JFIN. What is JFIN, Chuck? JFIN Group, hell no. Don't do monthly. Sorry, Chuck. Hens, CLSK. I've seen this one before. What is it? Clean Spark. I have no idea who they are. CLSK. Let's go to Yahoo Finance and see if this company even has dividends. And if so, how many? Because I really don't know who CLSK is. I have no idea what the hell they do. All right, there it is right there. Historical data. Why aren't we going to historical data? There it is right there. Why? What's taking so long? There it is. Give it a second. Okay. Okay, see that right there? Come on. Why isn't it opening? Come out, wherever you are. Okay, Clean Spark. Let's go all the way back to. No, that's just the stock price. I don't want to see stock price. I want to see the dividends. And it's not giving me any dividends. Why not? All right, I'm at a loss. It's not doing anything for me. All right, so we're going to go back to here. CLSK, the last 30 days. Okay, here we go for the last 30 days. Who came up with this one? Hens. Okay, 30 days ago was the bottom. Shoots up, pulls back up, back down. It's in a downward trend at the moment. It's going to be a no. Nahara. A-R-E. What the heck is that? A-R-E. A-R-E. Alexandria Real Estate REIT. Alrighty then. No. How's that? No, I don't do monthlies. See that? Those are months of the year. No. Ooh, Shock a 615. Let's take a look at Emerson, EMR. Well, that's a great company. Take a look at that right there. That looks appetizing. Well, let's take a look at the whole thing. All right, first and foremost, here's the high, here's the low, here's where it was, here's where it is. Look at this, up, down, sideways, up. 135, the 135's hell no. 135, oh, hell yes. That's over 2%. That works for me. Well, let's zoom in a little bit and take a good look at that chart. Gonna need the glasses for that. A year ago, we are at 109. We jump up, we pull back. There's the bottom right there, TDS day on the second week of April, 90.06. So it goes from 90.06, it jumps up 66% to 150. Well, that's a nice jump. Falls back down, it's going sideways for the last couple of weeks. Look at where we are. Where are we? Right there. Okay, we shoot up, pull back, and shoot up again. It's already at the 30-day high. See, 30-day high there. She falls down and shoots back up. Can it keep going higher? Well, look from here. 126 to 136. That's only $10. Well, $10 on a $125 stock, it's about 8%. That's only an 8% move. It's a $10 move, but it's only 8% of the stock value. I don't know if you want to keep doing that, because can it keep going up? Yeah, it can, but I like to get on the third day right here. See, 1 day, 2 days, 2 days up. On the third day, I jump in, and I probably get out right about there, because I'm only looking for 1%. I want to get in, I want to get out. Joe English, PLTK. What the hell is that? PLTK. Playtika. Playtika Holdings. Hell no. Okay, Into Mischief. We already looked at Verizon. Ali, ABM. What's ABM? ABM Industries. Hell no. Joe Nibbler, Jello Nibbler, back again. How are you doing today? Yes, I already did Verizon, already did ABM. Good evening, opinion on LYB. Brownwater, what the hell is LYB? LYB. Light and Babe, we already looked at this one. Okay, it's a no also. Okay, so let's go over here. Big Drew, Joshua wants to take a look at DraftKings. DKNG. Not a dividend anything. I don't even know if this company even has dividends. Look at the big drop here. Looking for a new bottom. So who won DraftKings? Joshua. Okay, it's dropping like a rock. Just keep your eye on it. Why always come for no reason? Why you always come for no reason? Okay, Cold War Kid, I have no idea what you mean by that. Big Drew wants to take a look at Advanced Auto Parts. I actually have some Advanced Auto Parts. AAP. Interesting position. Okay, take a look at this right there. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, back up again. Well, it's in a nice position. Well, let's take a look at the last 30 days. Okay, 30 days ago was the 30-day high. And then she drops right here, shoots up, goes sideways for a little bit, but she's definitely in an upward trend. She's currently at 57. Well, 57 for this week, did you see this number? Right there, the 57, is going for $3.30. Well, let's take a gander at it. Why not? All righty, let's get rid of this. Let's change this to covered stock. Let's do the 57s right there. And just one contract right there. And right there, and here's Johnny. Buy one covered call Advanced Auto Parts, 31 October 25. That's this coming Friday. The 57 call option. Well, look where the stock is now, 57.03. So if I'm buying it tomorrow morning, 57.03, I'm going to do a covered call at 57. Pick up this 365. It's only 5,300. Wait till you see the ROI on this one. This one's going to be crazy. Crazy, I tell you. All right, 365. Right there. Do you see that? Max profit. 365. I know what the profit's going to be before I even do it. So is it going to be a good trade or not? And then you have to ask yourself the question, do I like Advanced Auto Parts? Well, if the profit is 365, cost of trade, including commissions and fees, is 53.35. So let's do the math. 365 divided 53.35 becomes a grand total of 6. Can you imagine that? 6.8%. Can you imagine that? 6.8% for 1 week. Actually, for 3 days, if you like Advanced Auto Parts. And if I like Advanced Auto Parts at this current price. Okay, so the question is, number one, never buy something you don't want to hold long term. Are you okay with buying that long term? Uh-oh, come on. All right, there we go. Am I okay with buying Advanced Auto Parts and holding on to it until it hits my target? Well, what is my target? Well, if I'm buying it here tomorrow morning, 57.03, I'm selling it at 57, my target is 57. And if I can get, what was that, 6.8% for 3 days with a company that I actually like. I actually shop at Advanced Auto Parts. I do. I fix my own cars. Isn't that weird? So I'm going to write this one down also because I just like the numbers. And there, and we do that right there, and then we do this right like that, and then we do this right there. And that baby should pop up 6.8%. Uh-oh. Uh-oh. What the hell was that? There it is. Here we go. Buy one covered call Advanced Auto Parts. 31 October, that's this coming Friday, the 57 call option, profits 365, investment is 53, it comes out to a grand total of 6.8% if you like Advanced Auto Parts. Uh-oh. Uh-oh. All right, what am I looking at? Why is that not going backwards? Okay, we'll put it right there. Oh, I didn't write it down. 6.8%. Oh, there we go. Okay. 6.8%. There you go. Oops. Right there. There we go. All right. What do we have next? Next. All right. LYB. We already did that one. It's going to be a no. Quick 157. Thank you for that. Luigi. Thank you there, Mr. Luigi. Thank you. Emerson, we already looked at that. ABM, we already looked at that. AST, what the heck is AST? All right, I'm going to go over to the other side for a little bit. Simple number, right, sell it, thank you. Apple worth investing. Let's take a look at Apple. We haven't looked at Apple in a while. So, Apple it is. AAPL. Hell no. Who came up with that idea? Apple. Okay, we looked at DraftKings. We looked at Big Drew's Advanced Auto Parts. Why you always come in for no reason, I have no idea. Andy, how are you? All right, what else do we have? Gilbert. What's happening, Gilbert? Goatsus Aurelius wants to take a look at Ford. Why? Why? Ford has already had his pullback. You see that big jump from 11 to 14? Well, now it's coming back down. You gotta wait a couple of weeks for Ford, dude. Not now. Okay, Edicon Matthew. Can you analyze? Yeah, no, I don't do Forex. Sorry, Matthew, I don't do Forex. Mike B. Penske, got to give me the ticker symbol. All righty. Hey, Preston, do you still sell calls on the week of the EX dividend? Yep. Boss man, you're a wizard at this. Thank you, Dale Gilbert. Hello, sir. If you had 30,000, where would you just let it sit? I don't let any of my money sit, Gilbert. Terribly sorry. every single penny. Well, I shouldn't say that. Used to be every single penny I had working. But nowadays, because old Humpty Dumpty's in office and he says stupid stuff every once in a while and people panic and the stocks drop, I now have to leave money sitting on the sidelines just in case that happens. Goatsis Aurelius wants to take a look at you. I have no idea what that is. But I'm looking at, trying to think to myself, this thing's at $4 back in April. $4 in April. Can this thing really have 20 years of increased profits? I have no idea. You. All right, let's find out. Energy Fuels. It's not allowing me to see it. Come on. It's not allowing me to see. Why is that? All right, well, let's go up to summary. The summary will tell me if it has dividends or not. What kind of TV is that? Anthony, it's not a TV. It's an actual Vibe board. V-I-B-E board. Hollywood's in the house. Hey, James, thanks for all that you do. I'm killing it because of your teaching. Hollywood, nice going there, brother. Jamil, learning so much. Thank you. Who? MPW, 3% for Friday. Cool beans. Let's take a look at it. Okay, so here's you. Okay. No dividends, no dividends. See, EX dividend, none. So no to you. Sorry. NB, Brian, what's NB? NB. Noyo Kerp Devs Limited. Okay, this thing's at less than $1 a year ago. How can this thing definitely have 20 years of profits? Seriously, who came up with that one? Uh-oh. Goatsis Aurelius wants to take a look at Wolf. W-U-L-F. TerraWolf, Inc. Dude, I said, don't bring me something that's at the high of the year. Don't do that. What are we supposed to do with that? Look at it and say, oh, good for you? No. That guy, uh-oh, I've been that guy many a times. Always. Oh, you still seeing that guy? Oh, who was that guy you were with? Or, oh, that guy came over? Yeah, I was always that guy. Yeah, Wolf is going to be a no. That guy, Nokia, N-O-K. Hell no. Dude, I said, don't tell me something that's at the high of the year. There's no opportunity for us to jump in. Dawn, good evening, Dawn. AA. Do you own the shares or leaps? So AA, I actually have some leaps, and I actually do some, what do they call those, calendar spreads, poor man's covered calls against them. Yeah, so I do have them, but I don't understand what your question is. Brad, what delta? Oh, I don't even use the delta. Brad, you're under the assumption that I try to teach a 9-year-old about the Greeks. Brad, do you have a 9-year-old? Do you try to teach them about the Greeks? Nope. This is specifically what I taught my 9-year-old. No Greeks, no Fibonacci, no RSI index, no, what else is that weird stuff? No moving averages, nothing like that. Simple as can be. Ken O. Jake, this is a pre-recorded session. Well, you could say that tomorrow or the next day, but you can't really say that today, can you? Just another trader. Nokia, I did a zebra with an out of the money short call. All righty then. Jose, Advanced Auto Parts earnings in 2 days. All righty. Brad, can we talk about how you use Delta? You can use Delta any the way you want, Brad. I don't use it at all because what I'm doing has nothing to do with the Delta. It's either going up or it's going down. It's either giving me 1% or it's not. User.com, MP. What the hell is MP? Interesting. MP Materials. Ooh, okay. Well, here we are at 20 bucks a while ago. Shoots up to 100. That's a 400% increase. And then she drops down to where we are now. Definitely not something I want to jump into. Okay? How far down is it going to go before she turns around? If you like that company, of course. And always going to come to that. Can I analyze gold? Edicon Matthew, no. Gold does not give you a weekly cash flow. Actually, gold has no options on it whatsoever. Now, gold futures do. Gold stocks do. But gold bullion does not. It's a dust collector. Granted, you'll hold and it will retain its value, but you can't get cash flow from it. What else we got? All righty. What? There we go. Shallons, how's it going? Brad Swanson. Do you have a Delta? We already said about the Delta. Brad, I don't do the Delta. Okay, just a noob trader. If you get 7% on a weekly, that tells you that the binary event is coming up. Yes, I'm aware of that. Okay, now we looked at that and we said, well, there's something that's got to be up with that. And you do have to take into consideration when you're coming into earnings, they sometimes have over-exaggerated premiums. Well, I'm okay with that if it's a company I want to buy. You always got to remember that one. Do I like the company? Do I like the company at this current price? Am I willing to buy it and hold it until it hits my target and never sell at a loss? Just a noob trader, that's the questions you need to ask yourself. Just because it's giving you a nice premium doesn't make it a good trade, because you gotta have to like the company because you might have to hold on to it. Gilbert Cruz, how are you today? Lower Bucks Chess Academy. Okay. You would do puts on NOK because it recently jumped up. Yep, I got that one. Lad bigger on than Penske. Okay, thank you there, Mike. I like you, cool. People can learn something, thank you. Liquidity, Nokia, we looked at it already. Can you learn from? Okay, thank you. PLTR is 20 years. I sincerely love it. All right, I don't like it. I looked at the numbers for PLTR. Take a look at the numbers. The premium, not the premiums, the profits. Take a look at the dividends for PLTR. Maggie's Time wants to take a look at STWD. What the hell is that? Starwood PPTY TR Inc. REIT. Hell no. Okay. User.com MP, where I looked at that one. Bry Guy Meta, META. Well, Meta has only 2 dividends, as far as I know of, the last 2 years. That's it. Okay. Meta has, I won't be buying Meta unless Warren Buffett buys it, because it's not doing anything close to what I want. Now, I want 20 years of consistent profits. Well, Meta only has 2 years of dividends, so that's a no for me. CRWV is 20 years. Okay, I'm still 26, a little girl. Okay, good for you. All right, holy shit, 99 questions. Do you ever do cash secure puts? Yeah, once in a great while if the numbers work. Not that often, though. Right, guy. Crypto Slayer. Some gold miners have dividends. Yes, but do they have 20 years of them? And Kevsta, Circle, CRCL. What the hell is CRCL? CRCL. All righty. Even so, it's not the right time to buy Circle, Kevsta. Okay, she comes down, she went up, now she's going back down again. Mike Sweeney, I bought AAP today at 57 and somehow it charged me 58. It never went to that high. Did you do a market order or did you do a limit order, Mike Sweeney? TikTok Dad wants to take a look at Coca-Cola. 70 bucks. Okay. Market. Ouch. Synthetic zest. Have you heard of ZBCN? I think it is the best lower cap coin. What do you think about it? I never heard of ZBCN, and I don't do coins. Sorry. Crypto Slayer, how do you know when it is the right time to buy? Oh, Crypto Slayer. All right, Crypto Slayer, everything has to come into what do you call it? Into alignment, so to speak. Okay, so a couple of things. Number one is I don't want to buy at the high of the year. No. I don't want to buy it as she's dropping. No. Now, if she's dropping, finds the bottom and turns around, starts going up, yeah, I'll jump in as long as she's in an upward trend. Now, just because she's in an upward trend, well, the numbers have to work too. What am I buying it for? What am I selling? What is that paying me? Well, at $70.09 for Coca-Cola, next week's 70s is going for 86 cents. That's well over 1%. Yay! Thank you for that stream. Okay, so are the numbers working? Well, yeah, here, if I do the 70s for next week, that's a yes. Is it the right time? Down, now she's going up. Okay, well, let's zoom in a little bit close, take a closer look at that. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this. Okay, she drops to the bottom, shoots up, drops down, and now she's going back up again. Well, that usually fills. Well, it came down, now she's going back up. Can it keep going back up? And that's the big question. Question number one is always, does it make sense? Question number two is always, do I like this company? It's Coca-Cola. You better like it. It's been in business for 140 years. They got 5 decades of consistent profits, and it's offering you a 1% for next week if you like Coca-Cola. And it's always going to come to that. Do you like this company? Are you willing to buy it and hold it? How many days is a real trend of going up? Grateful, it's different for everyone. Okay, so for me, Grateful, I'm looking for a bottom. Okay, I'm looking for 2 days to the upside. And then on the third day up, I'll jump in. Well, here's the bottom, 1 day, 2 days. So I would have jumped in right there. As long as everything made sense. Do I do leap options? User.com. Yes, I do. How about Walmart? Well, I love Walmart. WMT. Just not this week, though. Okay? Here's your top. Here's your bottom. She drops, shoots up. Now she's coming down. How far down is Walmart going to go before it finds a bottom, turns around, goes back up? There's no sense looking at the numbers because it's definitely in a downward trend. Now, maybe next week, I'm going to write Walmart down for next week because it looks like it's going to find a bottom in the next couple of days. And when it does, I want to be there to take advantage of it. WMT for next week. Okay, so over to here. Club Med Tom, what was the other one you wrote down before AAP? Tom, we'll get to that in a second. DG, for that AAP, Advanced Auto Parts, it would be 365 divided by 5704, which is 6.3 ROI instead of 6.8. Wow. All right. I'm kind of curious where you came up with that one. Hold on for a second. Hold on. DKG. Okay. Advanced Auto Parts, right? That's this one right here. All righty. So, DKG. You ready? Okay, DKG, we need a calculator. I don't have my calculator handy, damn it. All right. If you had a calculator handy, the stock price. 56.59. Wait a minute, that's just the bid. Okay, anyway. 365 is the profit. The investment is 5335.66. Where do you come up with 5704? DKG 302. 365 is the profit. Cost of the trade, including commissions and fees, is 5,335. Where are you coming up with 5,704? I'm not seeing it. Oops. I'm not seeing it. And, I'm terribly sorry. 6.8 is 6.3. It's still over 6%, no matter which way you look at it. Prada, how are you doing today? Vincent, how are you? Foxtrot, PMI. What is PMI, Foxtrot? PMI. All right, let's get rid of this. Let's do PMI. PMI. That is Picard Medical. There's no options. All right, let's drop this back down. Right there. And what are we looking at? Give it a second. No options. PMI. Hell no. Sorry. All right. Ray, do you still get dividends if you buy and sell at your auto targets? Okay, Ray, as long as I own the stock on the date of record, I'm entitled to the dividend. Finbin, STLA. All right. Stephen Nashmore, private mortgage insurance. Yeah, I get that. Love the aggressive lives. All right, thank you. Okay, so Finbin wants to take a look at STLA. Stellantis. Okay, well, let's take a look at Stellantis. Here's the high, here's the low, here's where it was, here's where it is. Sideways down, sideways up, 1131. It's at a 30-day high. Why the hell am I looking at it? Think about it. 30 days ago, shoots up, pulls back, shoots up again. $9.60 to $11.30. That's $2. $2 on a $9 stock is about 20%. That is a little over 20%. Why the hell are we looking at it? I don't buy anything that jumps up 20%. It's time to let it go, wait for it to pull back. As a matter of fact, Stellantis, we're going to put that down for 2 weeks from today. I'm just throwing everything around here. Throwing things, Stellantis for 2 weeks from today. Tra-la-la. Here we go. Oh, look at that. STLA. All right, that works. Citi wants to take a look at the gap. Remember that commercial from the 80s? Fall into the gap. Nope. Same thing, 30-day high. Why am I looking at something at a 30-day high? Okay, 30 days ago, up, down, up. It went from 19 to 24.50. That's over $5. 19. to 24. That's over 20%. Hell no. New here. Are you a day trader or a swing trader? I am neither. 5-year chart looks different. Okay, Finbin, I get it. 5-year chart looks different. 3-year chart looks different. 10-year chart looks different. 20-year chart looks different. You know what looks even different than that? Check out this chart. You'll like this one. This is a cool one. This one's cool. This, my friend, Finbin, this is called a seasonality chart. Okay, seasonality chart. It's just 1 year. Okay, all the way to the left is January 1st. All the way to the right is December 31st. The blue line represents the movement for this year. This red line represents the movement over the last 10 years on average. Now, the interesting thing about that, Finbin, is I can change it to look at 20 years. Now, this is 20 years. The blue is still this year, and the red is 20 years average movement. The only thing it's telling me is, what does the stock normally do this time of year? That's why it's called seasonality. Okay, winter, spring, summer, fall, winter. Okay, winter goes from December to January, then spring, then your summer, then your fall. Well, look at this right here, the fourth quarter. Fourth quarter starts in October. Okay, October she drops, and right at the beginning of November, she shoots up nicely. That's over the last 20 years, a consistent movement. I'm waiting on AMD to come down. I'm up 68% on an option that expires next year. Okay, you do realize, all right, we took Rigetti. You want me to look at Rigetti Spaghetti? RGTI? Wait a minute, I'm going to change this back because I like to set it 10 years. 10 years, okay. So somebody wants to take a look at Rigetti Spaghetti. RGTI. RGTI. There you go, Rigetti Spaghetti. It's at less than $1 a year ago, shoots up to 20, drops back down, back up to 60, back down to 30. What the hell are we looking at this for? Remember, who was that? Moyad? Is that right? Moyad? What I'm looking for is simple, safe, predictable. This is not predictable. This is not something it does every single year, year after year after year. Nothing goes from $1 and shoots up to $60 every year. Nothing does. That's not predictable. I don't look at stuff that's not predictable, because what is it going to do for me? There's 10,700 different companies. Why the hell am I looking at this? I like predictably. Predictably, you like that one? Crypto Slayer. Are we only looking at dividend stocks? You know, that's a funny thing, Crypto Slayer, because the name of the show is Dividend Investing. Well, the only thing that offers dividends are dividend stocks. So I'm guessing, yeah, the only thing we're looking at is dividend stocks. Okay. LUMM. What the hell is that? RKT. What the heck is RKT? Why can't you guys come up with stuff that I heard of? RKT. Rocket companies. Oh, hell no. Okay, here's your rocket companies. 30 days ago was at the high. We dropped down to here, shoot up, now it's coming back down again. Not this week. Best stocks today. Maxi Moves, how are you today? Best stocks today, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. LUMN. A Garza, LUMN. What is that? LUMN. Lumen Technologies. Hell no, don't show me shit that's at the high of the year. We can't, what are we supposed to do with this? Seriously, what are we supposed to do? There's nothing there. It already made the move. So why are we looking at it? Uh-oh. Got somebody here in the background making noise. Oh, KJ wants to take a look at Bristol Myers Squibb. Way to go, KJ. Look at that one. BMY. Bristol Myers. Oh, hell no. Sorry, dude. It was still bottom fishing. We haven't found it yet. It's going to pop up any day now. And then Conterra Electric. What's that? CTRA. CTRA. Conterra. Same thing, dude. Look at this. Not the opportune time. Last 30 days. Okay? Shoots up, pulls back, shoots up, starting to pull back. In a week or so, maybe. Hey, Gilbert, what are we looking to buy this week? Crypto Slayer says, NVIDIA offers a juicy 0.02% dividend. Yeah, I know that one. Late night, missed your show today. Sorry, Nico. Okay, Ashok Kumar, Misty ain't happening, brother. Take a look at the numbers. Ain't happening. And it's 11 o'clock, saved by the bell. Ho ho. Okay, so Ashok Kumar, MSTY. Seriously, dude, go take a look at the dividends and see how consistently profitable that company has been. As far as I know, that company's not even 3 or 4 years old yet. And it can't sustain those numbers. Lizzie, how are you today? Crypto Slayer likes Pfizer, PFE. PFE. Nope, sorry, dude. Take a look. What happened here? Last 30 days. Look at that. Shoots up, drops down. Now she's going sideways. Ain't there. Okay? Okay, what else do we have? Gary, how are you, Jane? Okay, Garza, we looked at that. Ali, UVV ain't happening, brother. LIDR, what the hell is that? LIDR. Why can't you guys have normal companies? That ain't happening. Riley will be 9.1%. Yeah, I'm aware of that. I bought some Riley this morning. Chris, UPS, coming in at the last minute. Oh, hell no. Sorry, dude. That right there, that gap up, yeah, that's going to pull back eventually. El Chin, how you doing? Quinn, good evening. All righty, all right. Rob, I'm not even going to take a look at O Realty. Can you look at PMI? What the hell is PMI? Hell no. I got a pumpkin. Can't see what you're doing on the board. Sorry, Nick. The 5704 was the last traded stock price or the ask price. Thank you. B-Man, ULTY, hell no. B-Man, do yourself a favor. Find yourself a really good financial website and learn how to use it. Cliff, sell puts in reverse of what you're doing. I know you know that. Cliff, yeah, I know that. Okay, and you know, you've been here before. Okay, I only give away one trading strategy. And the one trading strategy I'm giving away, well, averages around 50% per year. So, yeah. Crypto Slayer, MOL Tree, I love that one. We're past 11, so I'm not doing it. I got a few more emails to take a look at. Hey, take a look at, nothing there. Is that the Thinkorswim platform? Yes, it is. Skyman, how are you today? All right, YMF loads. Solana is not a dividend stock. Chris, we already looked at UPS. Rob, O Realty is a monthly. It's a no. Marianne, hi. MAFMTS. I have no idea what that is. Tesla? Tesla is not, TSLA, is not a dividend stock. And she's in a nice upward trend at the moment. T's gone. That means we're done for the day. Mohammed, what do you mean when you say you don't do monthlies? Okay. Hi, do you answer questions about stocks? Absolutely. XRP, no. I have RSU through my job. How can I make more money with my stocks? RSU, never heard of it. RSU. Well, apparently you're not in the US because that's not popping up, RSU. Can't help you out there, kiddo. All right, so Mohammed wants to know why I don't do monthlies. All right, Mohammed, you ready for this? I'm going to explain to you why I don't do monthlies. Now, what we're looking at now is called O'Realty. Everybody seems to like that thing. Look at the stock. Okay, down, up, down, up, down, up, down. Okay, that's what it's doing. Let's look at the last 30 days. The last 30 days would be right about there. Okay, Mohammed, you see that? That's the last 30 days. Okay, she went up, down, now we're here, 59.21. All right, well, let's look at this one right there, that option. That's a monthly option. So let's take a gander at it. If I'm going to do a monthly covered call on this one, 59.21, right there, I'm getting 60 cents. I'm getting 60 cents on a $60 stock. That's 1%. Okay? You see that? The stock is 59.21. The 59, the closest one is going to be the 60, and that's going for 60 cents. That's 1%. That's awesome. But that's for 1 month. One whole month. 1% for 1 whole month. Which means if I do that successfully each and every single month, I'm getting 12% at the end of the year. Not only that, okay, Mohammed, you see this here? $60.60. It jumps up to 60.80. It drops down to 58. It jumps up to 60.80. It drops down to 59.21. Now, Mohammed, tell me, where is this going to be in 30 days? It's hard enough to try to figure out where it's going to be in 5 days. You want me to figure out where this is going to be in 30 days. It's not that easy. And even if I'm right, I'm only getting 1%. Let's look at let's find a good one. Natasha, I have a question. I need a one-on-one, please. I'm catching a flight for my session. Natasha, you're on TikTok. Drop me your phone number. As soon as we're done here in like 5-10 minutes, I'll give you a buzz. Okay? All right. So let's take a look at AT&T. Okay, that's a weekly. All right, fair enough. AT&T. All right. So last 30 days. Number one, last 30 days. Here we go. Drops, back up, back down, back up. Now, considering it's a weekly, where does it look like it's going to be in 5 days? Well, in 5 days, it looks like it'll be somewhere probably around here, between here and here, somewhere in that area. That's what it looks like. Well, that's easy to see. Now, wait a second. It's currently at 25.70. The 25.50, which is the closest one, is paying 2%. Now, I don't need to bring out a calculator to tell you 2% every single week is over 100% for the end of the year. So monthly, the example that we used, 1% a month, that's 12%. This one right here, AT&T, we all know who they are. Weekly, 2% a week, that's 100% a year. So why would I even bother doing a monthly when the weeklies pay 2 to 3 times the same amount of money for the same amount of work? Now, granted, I could do it every week. Big deal. It only takes me 10 minutes, and I'm pretty much okay with 10 minutes. That being said, we're past 11 o'clock. We're calling it a day. If Natasha, okay, if you send me a number, I'm going to call you as soon as I turn off all these cameras and whatnot. If you've sent me a number, of course. Okay, so you guys have a great day over here. See you in the morning. Done. And over here, you guys have a great night. Have a lovely evening. And you guys over here, a lovely evening also. Now, you guys here, we will catch you tomorrow. Same bat time, same bat channel. Yay! Richard, thank you there, Richard. Here, guys, have a great night.